Hey guys, welcome to another edition of the Crypto Live with Alex, featured by Trading Analysis. We are going to go over the macro events. There has been a lot of things happening in the last week, and then we're going to switch and look what is going on in the crypto space. So as usual, you can leave your comments and requests in the chat box. So let's dive in. Let's look what is going on this Fed CME tool and what the market is looking for the Fed moving rates in the next couple of meetings. So 2nd of November, we are currently at 3 to 325 and 75 basis point move is most likely to happen, 60.8%. Of course, we are going to have another CPI data, which will come out on 13th of October. So watch for that. That will be one of the things probably that market will look with a big attention. From 9.1, we are currently at 8.3. So I'm very curious to see if our thesis, which was playing off in the inflation moving lower, will going to continue on the next inflation or CPI reading around so exactly on 13th of November. So if we go further on 14th of December, we have a different outcome. So I will wait on this, especially to see the latest CPI number. So target rate now is moved to 4 to 4.25. And market is now looking for 425 to 450 in 14th of December. But that's, I think, too long in time with this condensed events that are happening quicker and quicker as the weeks go by over geopolitics and also in some of the central banks in the world. So we're going to touch on that, what has happened in the England in the last couple of days. But overall, I think we should focus, and most likely, even if the CPI number comes out moderately lower, I think the Fed will pursue this 375 for the next meeting target, which means that 75 basis points is something which is more likely to happen. But concluding for basically what Jerome Powell has said on the last meeting. So let's see what is the situation in the overall rates in the world. As you can see, this is the almost major countries with the Western and a couple of other economies. So as you can see, currently the only negative rate that we have currently is Japan, which is actually applying the yield curve control, fixing the real rates at 0.25. So most of the Western countries are already hiking relatively with, of course, a late response, but Fed is at 325, Australia is at 2.35, Great Britain is at 225, and of course we have announcement from the ECB. Lagarde was very clear that the ECB will hike rates in the next couple of meetings. We are currently at 1.25, so probably we're going to go faster on the upside. It depends, are they going to hike 50 or 75 basis points? But nevertheless, our charts has been showing acceleration in that, and that has been something which is happening and was not much of a problem to actually foresee. So even Swiss National Bank raised interest rates at 0.5, so they're out of the minus territory. And of course, the market was following the events, what has happened in Britain. Actually, Britain made a short-term, as they say, QE to resolve some credit issues in the system. This is a relatively kind of a first warning that the global liquidity system is not handling well rates moving further on the upside, and this might be a first crack. I think it's just a warning, so we need to track that very carefully. But actually, Bank of England acted in the two fronts. They lifted up rates, which was postponed from the Queen's death that week, and then they announced and they warned that they're going to intervene and actually do a QE on the longer dated gilts, which has happened yesterday. And their explanation is they are protecting financial stability. And this is a pretty hard, language. So I think they're feeling some cracks into the credit flows, and especially after they announced they're going to reduce taxes and a couple of other burdens, so to kind of steer up the growth in economy because they think they're already in a recession. So this is something to be watched very carefully. 2 weeks ago, we had also Bank of Japan intervening, just warning. I've been long present in the FX markets, more than 10 years before. And usually when the central banks intervenes, it's kind of a small warning that this carry trade, which is going on from Japan to US, is likely it's likely reached some levels which starts to be undesirable. So we might see further events there as well when you have a central banks intervening. This is just a warning, of course. They can just scare off the late entries, because if you are looking for the interest rate differential and moving money from Japan to US, you of course need to pay attention what the base currency is. So you're going from yen to dollar, and if the exchange rate goes in opposite direction, you are facing a danger to lose your interest rates profits, and of course on account of the currency, because you have to go back in Japan in the Japanese yen, and if you go by lower exchange rate, you're gonna lose interest rate differential that you earned. So I think it's just a warning, but nevertheless, a couple of things happening in the last 3 weeks from the central banks, which are relatively, I will not say worrisome, but I think it needs to be observed with much more attention. So situation on the 10-year yields, I have did some measurements. There is a wave count. This is a wave 4 and a big wave 5. We go down, but I think pairing that with the rates in the Europe, it's most likely we are completing the higher degree wave 3. We will see actually any move below this wave 4 will mean that our original wave count is most likely the one we should follow. I'm just showing you the alternative one, which actually looks for a pullback and one more small push on the upside into wave 5, and then a bigger correction to the downside. So in either case, I think the correction is coming. This wave count actually proposes a little bit more time as we see how the Fed is treating the rates in the 2023-24. Maybe it resembles a little bit better what the Fed has in mind. So of course we're going to track that, we're going to adjust. But I think we are in the last stages between this 3% and 4.5, from where we might get some back and forth and actually make the significant fifth wave high, and then correct pretty sizably on the downside. So I'm still tracking this region here from 3 to 5, which I think is going to be the terminal one, at least in this cycle. So same situation in the Europe. We have tracked this pretty nicely. We did move down in a fourth wave of the intermediary wave 3, and now we are tracing a pretty sizable wave 5. If the Bank of England continues to intervene, markets and rates might drop and actually form this wave 4. And assets classes, risk 1, might shoot on the upside. This also can be some type of a triangulation. That's why I formed some wave count on the S&P, which is still valid, which might resemble the situation, and I will show you that and explain. So let's move on a dollar index, where we have seen our targets are reached. So we are trading between 112.50 and 114. So one of the levels we looked actually provided some resistance, but if we look on a smaller time frame, we still don't have a 5-wave move on the upside. So I think that this will not be the terminal price for the dollar reversal. I think even if we see a reversal, it's going to be of a smaller magnitude, and I think we're going to continue down around these upper resistance levels, allowing this to for a small overshoot. But the picture basically on the higher time frames stays the same. The last levels I would look is around 118, and this is the most extreme levels. I was pretty much against 120. 118 is pretty close, but let's see what will happen if I go on a smaller time frame. As you can see, we are forming only 3 waves on the upside with a small pullback now. So this is not enough. We can anchor this wave 5 here. It is possible that this will start to go sideways and then actually do some small push on the upside, and we finish over there with dollar. Let's see what will happen, but my stance overall will stay the same, that we are in the last terminal stages of this move on the upside before the larger correction starts. So if we look the whole picture, we are looking for a potentially 5-wave sequence. Even if you take this as a WXY, if this is the last or a wave in I, you will see a pullback in B and up there move in a C of a Y wave. So in both cases, looking either a 5-wave sequence or a more complex sequence, you will see a smaller or a larger pullback in dollar, which I think it's going to start relatively soon. And I think we are in the latest stages of this move on the upside. So let's look what is going on in commodities. Our Thomson Reuters commodity index is still moving lower. I'm looking for a further move down. We might have some type of a triangulation or some type of a flat kind of a week on the upside, or we're going to continue directly downside. But nevertheless, from our observation, that this is actually a last sequence in this Thomson Reuters commodity index, we have started to move lower in a corrective manner for now, only 3 waves down. So we're going to continue monitor that. Also, oil is moving down. Soybean is in correction. Some of the other commodities are also moving lower, as well as copper. So I think this well represents a move down on commodities, which has to actually show up in the inflation figures that we are going to see in the next couple of weeks. So this actually is going well. So we're gonna go further, look the oil chart. So oil is still moving lower. You know my overall weekly stance. I don't think this is the end of this move. Looking this chart from almost back 200 years. So I'm going to show you that again, just for the orientation where we are. So if we leave the time frames and we look whole of this sequence from the beginning, and of course we see a spike in a wave 1 and 2, very nice intermediary wave 3 pullback in a wave 4, and I think we are in the last sequence in the next 5 to 8 years forming this wave 5 on the upside. So this is not very hard to imagine in the geopolitical scene that we are going through now. So I'm going to stay with that wave count. I don't think this is the failed fifth. If you look this high, we didn't overshoot it. Even if we go back to the bar chart, we came pretty close, but I don't think this is the truncated fifth wave, and the actually oil is going to undergo a big correction. I think we don't see any geopolitical, fundamental, or any other reason for the oil to move relatively so much lower as it's going now. So we are now trading on Brent at 89. I think it's going to be a little bit more downside around 65, 70 levels before we form some and reach some support levels and actually form some base. And then we will see, if we see impulsive rise on the upside, then this wave count will gain in probability. But I'm going to stay with this stance that oil move up is not finished, that this is just a correction, and we're going to see more upside in the next couple of years. So let's move to the net gas. Net gas is moving lower, enforcing my fourth wave probability. I was going back and forth with this wave 5. This still could be a 3-wave move lower with a potentially start of the wave 5, but we are testing some of the levels where we usually give up with the bullish wave count. We are trading at 786 Fibonacci retracement. So any move below that will solidify some wave 4 still in making, and then a seasonal move up in net gas. This is the Henry Hub futures for the higher prices in winter. So I'm going to stay with that thesis that this is just a consolidation, or if we start to go up impulsively, we're going to see this move already in a third wave on the upside. So we are going to go and spend some time probably here before we start a final sequence, which might last until March or even April of 2023. So let's look my S&P wave count, something which I have been looking potentially if we see this more QE and market gets confused even more, if we see something impulsive on the upside. So this will be the take. And I think for me, a good representation of this confusion, which might last for some time. Maybe we're going to form some type of a triangulation. This is a contracting triangle when you have a B wave going below the beginning of the A wave, so it's still valid. If we penetrate these lower levels further, I think this wave count will be off. So I will continue, of course, to follow the work of Bennett and Terry, which are the main guys which are tracking stocks at Trading Analysis. This is just my potential thesis and interpretation in the case we do and see some more QE, even from some other central banks. Market might get confused, starts maybe to think that Fed is going to pivot, make some type of a longer consolidation up and down, and actually on the end form this complex correction down to, let's say, 3,200, 3,000, where we can see some support forming. So this triangle, in the case it appears, it will greatly solidify the thesis that actually this is just a correction. You cannot see Elliott Wave triangle in many places. It can happen only in a fourth wave and in a position of a B wave or the X wave in the corrections. So in this case, this triangle, if it happens, and that is an interesting notion for many Elliottians, will solidify the case that this is just a correction and we're going to continue higher after either economy adjusts to these new policies, or we back off from these policies and actually do another round of QE and actually give some relief to markets to go further on the upside. So we're going to monitor because I think this is very important for the next couple of years outlook. One of the things that I was looking as well is the stock of Mara. This is a Marathon Digital Holding. I've been showing that on Twitter a couple of times. So from the lows, Mara clearly has a nice 5-wave move on the upside with the ABC pullback, exactly to equality. So this is something which we call a measured move, and 50% retracement. So from there, we have a nice 5-wave move on the upside, and the ABC pullback down to retracement levels around 50%, and the quality of A, B to C. So we are seeing a move from 6 that I checked yesterday. We are already up to almost 11. So if we get some type of a movement on the upside, that means potentially this might be the X wave, and this correction will go further lower, or this is going to be a newly higher time frame impulse on the upside, and after pullback we're going to go higher. So this is also on my watch list. It is very interesting what will happen here, and this is kind of announces a possibility that we're going to go higher on some assets classes and produce basically another move on the upside, which will actually spook everybody, and then we're going to reverse further lower. So I'm very much attentive to developments here. Let's look total crypto market cap. Still in some type of a, I would say, triangulation that will pair up with the S&P wave count, so A, B, C, D, and E. It's still good with the time guideline as the wave 2 developed and the time consumed was relatively nice. So the wave 3 down, this might be just a bigger consolidation. There is a couple of possibilities here, and I will show you that on a Bitcoin chart, because basically they are trading the same. So I will still look for a move lower. There is no any signs of a sustainable recovery there, and I think most likely, even if we start to spend time more in this range, this might actually morph into some type of a triangulation with one more move down. Why is that important? Triangulations are usually, especially when you have them in the impulsive sequence, in any direction, they're announcing to you that there is only one more move down left. So that's a very important notion in the Elliott Wave, theory. And at that time, you usually think that triangles are just some messy consolidations, but actually they are representing a balancing force between the bulls and bears, and actually allows for one more push to the downside before either another impulse in the direction of a trend starts, or we have a larger corrective pullback. So I think it's very important to track. If you see a triangle, then the orientation is relatively easy because we will see one more push down and then either a swift big recovery or a new impulsive wave on the upside. So I think the same situation we can see on the Bitcoin. Very hard to trade Bitcoin in the current environment. So I will show you that chart. Also, I published that on Twitter. There is a couple of possibilities there on the Bitcoin chart. And in that respect, you can see a couple of probabilities. It can be just some type of a ending diagonal directional move to the downside. So this can be end of a wave 4, wave 1, wave 2, wave 3, wave 4, and wave 5. It can be also a triangle. And also it can be a flat. So for my taste, many possibilities for trading. This is a pretty sideways move. So I advise our members to stay out of the Bitcoin because this is a very tough environment if you want to trade this. And most likely, even if you have some success on the end, triangles will drive you crazy and make you lose a lot of money. So I do recommend staying out until the situation is cleared or basically out on any sides of this consolidation. So many possibilities. So that's why I leave Bitcoin on the side, waiting patiently to see what this correction here will on the end actually perform. So ending diagonal, triangle, or a flat even to higher levels are possible. Usually this type of things happens when the market wants to confuse you, and that happens a lot of times. So this will be an A wave down in B, up in C. So one form of a potential flat is also in cards. So I don't see really some of the signs for that, because for a flat on the upside, which needs to have 5-wave move, you need to see impulsive move testing this previous swing high, which we actually don't see for now. So I will say that the flat version most likely is the last one that I would actually pursue in this current moment. This looks like a triangulation to me. And that will be confirmed if we go a little bit more higher, around 20K, 21K, and then a move down. So this will be A, B, C, D, and E, and then we will have one more move to the downside. We will anchor wave for here, and actually that will be the same tail as we have it on the total crypto market cap. Triangulation usually mark the movement or balance of forces before the last move on the downside. So this will be certainly a sign that we're going to see a large recovery or a new uptrend after this fifth wave is done. So on the higher time frames, I'm still staying for the 5-wave move on the upside. I didn't change that generally. So my view overall is this is still going to look for as long as we trade above this invalidation level, for the development in this fifth wave on the upside for now. So in Ethereum, it's similar situation. But Ethereum is holding much more better than Bitcoin, and also Ethereum Bitcoin chart still looks very bullish. So no wonder why Ethereum is holding well in relation to Bitcoin. So This is still a pretty bullish chart on Ethereum. So wave 1, wave 2, pullback in a wave 4, and we are now in a corrective secondary wave movement lower before the big third wave on the upside start to actually complete this sequence. So obviously this chart offers a considerable advantage to Ethereum when the next bull run is starting. Potentially that means that either Ethereum will go faster or it's going to go to a bigger margin on the upside than Bitcoin. And this chart actually portrays that Ethereum will be a favored one compared to the Bitcoin, especially when you have and when you see these corrections done and you have a small impulsive wave, which will provide a good risk reward for the further upside. Let me look at Ethereum dollar, which is, as I said, holding very well. We don't have any impulsive yet feature from this nice hold of this support. You can count this still as an ABC, but you need an impulsive move up to start to look to this to be more impulsively. My reserve version, people ask me, what is your wave count on Ethereum on the downside? Is that this is going to be a 5-wave move similar to Bitcoin. And we're going to reach levels around 700 and 800, while the Bitcoin reaches between 15 and 16K or 14 to 16K. So this will be the worst case scenario. I will look on Ether. I'm still not looking for that, but this current recovery is not so good. We are going sideways, as you can see. So I need to wait more potential advancement to actually hold this opinion that Ethereum already has a 5-wave move and a 3-wave counter trend pullback, and this is going to continue further higher. So we need to weigh these signs. Current price action is pretty sideways, which doesn't give us much of a, I will say, juice that we are going to continue higher. But let's wait. Let's see what is going to happen. As long as we hold above this Fibonacci cluster, I think we are safe to still kind of expect a potential bullish development, but let's see. For now, we are still trading pretty much sideways here after this 3-wave move unfolded. One of the cryptocurrencies that are still holding very good, of course, is Matic. So Matic is also very nicely in a potential 5 waves up and a correction. We don't see in Matic any sizable move to the downside, which is very interesting. So potentially we can anchor a wave to here, but we need to see an impulsive development higher. Okay, so that the probability rise that the pullback is basically a good risk reward for the further move on the upside. But for now, we don't have anything of a impulsive nature yet in 5 waves on the upside. So this can morph into a complex correction to a little bit lower level, but I will just say that Matic should be on a watch because it's holding very well as an Ether, and there is a sizable upside potential because I think there is still a 5th wave missing if you look whole of the sequence. So there is a couple of things I want to discuss here. There is a guideline of alternation. So as you can see in Matic, clearly this was a very long wave 2, which we need to relabel. I don't know how this actually came to this. So this is a pretty nice complex correction if you count it. So this is a 3 waves down in W, 3 waves up in X, and 3 waves down in Y, which means that in a guideline of alternation, when you have such a complex wave 2, usually you will see a wave 4 being more simple. So we have a really nice fib ratio because this is a rarity. Complex wave 2s are very rare. So 0.618 time ratio between the time spent in the wave 2 and a wave 4 is pretty good one. So this is kind of complies with the overall notion that this was alternating corrective moves. This was a complex one, this was a directional one, and from there we have some type of a 5-wave move on the upside. So I'm staying cautiously optimistic on Matic on the upside, and I think there is a kind of not certain probability, but there is a chance that probability is higher that Matic will kind of just, even if it goes lower, just go a little bit more to the downside and then reverse and starts the new uptrend when the conditions are met in the overall crypto market. So I find this pretty nice to watch. Also, I'm looking to include a glass node or on-chain analysis. I'm going to start to educate myself about that. I looked the last video from them, which I recommend you to do, and we have concluded a couple of weeks back with our members that the only longer-term holders of Bitcoin has stayed. They're not selling, and actually they confirmed that in yesterday's video, which I think everybody should look, because it gives you kind of a notion what is happening inside. I don't consider Glassnode or on-chain analysis perfect. It has a lot of things which it lacks, but it's just interrelation between the wallets and what is going on in the movements, intermovements in the blockchain. So I think they have some very nice metrics which can give additional data and additional probability or increased probability in our other tools that we use as well. So very nice video, so I recommend you to watch that. What is else from cryptos which is doing good? Binance coin is also, I don't like so much a structure on the upside on a Binance coin, but we are holding nicely now. We are trading around this kind of a trend line. Nice correction here, so I will also give a Binance a chance that potentially we might be already in some type of an impulsive move or a little bit lower. So we don't trade in a proximity of the previous lows. Previous lows was relatively far from the current price action. 183, it's not far. 280 for the crypto standards. It's not far, but I think it's trading good compared to others. So I will put Binance Coin still in that category, which should be also on a watch list for a potential reversal. And definitely we watch this with our members. So let me just quickly go back to gold and silver, which I always skip. And then I'm gonna revisit XRP and a couple of other cryptos for you guys. And then we're going to switch to your request. So let me just find what is going on. Let me just find that platform for the gold and silver. Nothing, I would say nothing spectacular there. Silver didn't actually sustain. We looked for a possible 5 waves up. We didn't get it. So we have to look this as a potential consolidation as in a type of an ending diagonal further lower. We didn't yield 5 waves up, so that's obviously put this to be very corrective. So there is no confirmation that we are actually at lows at silver. And gold is pretty much still dancing around this 200 moving average and couple of the levels we are looking. So we still consider this with the RSI already around 30, and on gold in the last, I would say, how much, 6 years. This RSI is the third lowest point. We have this one around 2017, then this one in January or March 2018, and now we are touching it. We had some type of recoveries after that, so I think this region should be watched. I'm still as well with looking these charts with our guys in the trading analysis. I'm still looking for this scenario, but if you want to be and to do anything with gold, we usually recommend that you have a higher time frame 5 wave move on the upside reversal signature. Until you see that, I don't think it's worthwhile to fish for any bottoms. I know people has a kind of a sweet wish to do that, but with the years you understand that that is really not necessary, because even if you have 5 waves, it's going to make a pullback. Usually wave 2s are deeper, so you are not going to lose much if you enter here and be right, and here you can measure your risk more properly. I know it's rewarding, but I mean, as I grow as a trader and as an analyst, as I look all of this, what happened in my career, I have concluded you really doesn't lose much, but probability rises with this type of thing if you wait a pullback after a reversal signature. So basically, I think gold is on the same place. I still have this FIB cluster here for this potential flat. So let's see, let's wait 5 waves up, and then we can talk about the potential bullish recovery. So that's it, guys. Let me look your comments and questions. Hey, William, what's up, man? How are you? Felix is there. Yeah, fourth waves are things to bear. They're always very difficult to. So basically, when people ask me why do you use Elliott Wave as a methodology, above all, with all of the other measures and the relatively fascination with all of these mathematical things, how the universe is functioning, and generally human psychology, Elliott Wave is a methodology which provides you, at least to me, a very good orientational tool where you are. Okay, so as humans, we tend to seek orientation almost every day in traffic, in travels, in ideologies, in politics, everywhere we seek orientation. So I think for me, Elliott Pro gets a pretty good orientational tool. So yeah, so let me look a couple of more charts, and I already checked Matic, Aave. Let's look Aave. What is going on there? Let me just find the chart of Aave, which I think I have populated. So yeah, Aave is, let me use this one. Nothing will lack from it. So still you have, you can squeeze up some type of a leading diagonal here. It's still unconfirmed. We have on Aave only 3 ways pullback, but you have to bear in mind that now the bank deposits also becomes very attractive with 3-4%. So I don't know how the big propensity will be to, especially after collapse of Celsius, how much the new entries will be on DeFi space. But if you look technically, it still looks pretty okay. You have some type of a potential leading diagonal and the 3-wave pullback yet now, which is contained in a parallel channel. So what we need actually to see on a higher time frames, we need to see some type of a, if we go further on the upside, the break of this secondary higher channel to prove this to be impulsive on the upside. So always when you look, you need to look 5 waves up, and then of course on a pullback, as I said, the risk will be much more better to handle as actually applying some gambling structure. Okay, I will also understand if this is just an ABC after a small impulsive move and a pullback. Also, I do speak with our members, and usually I use that in my own trading. So 5 waves up, small pullback, I can put a small stop and then look for a C wave on the upside, of course controlling pretty much the risk. So on couple of these time frames, you can kind of figure out these small wave structures which can give you the opportunity. So Aave, I think it's doesn't look so bad. So let me look what's going on Chili's. Hey Schnitzel, what's up? Yeah, so we looked this with our members, and we looked also here. So obviously you have a very nice 5-wave move on the upside after these lows. So looking the higher time frame, this was a correction to the downside, which is most likely over, and this is something which we want to see. So from the lows here and a 5-wave sequence, you have a nice, a relatively very structured 5-wave reversal, and I think the correction is starting. So on Chili's, I will look for the ABC and then for a continuation on the upside for now. So this is all what I want to see to actually make me think that the current low has qualified for a potential longer-term reversal signature. Okay, so let me repeat that when I see a 5 waves up on this higher time frame, this is daily, this is actually starts to flash red lights to me, and this is actually one of the qualifications that I look that actually the trend might still continue further on the upside. So this is the first flashing light which I look for a potential trade, and this one definitely is, because we have a very nice and very structured 5-wave move on the upside from lows, which actually now overlooks for a 3-wave pullback and then continuation on the upside. So very good chart. I mean, this is what I want to see. I don't know if I looked Prosper. If this is the right chart of the Prosper, I don't have much to say about this chart. The data availability is not much. We have some type of a move up and a collapse to the downside. You need to spend some time to count this, but obviously if you do this as a 1-2, some type of a wave 3 or some type of an ending diagonal, you need the 5-wave move up to this swing to actually even think of a potential at least temporary reversal. So usually how you're going to treat this when you want to see what's going on, you can look the previous swing highs, and when you put the lines on the previous swing highs, usually what happens here is that you're going to see either an ABC pullback challenging these previous swing highs, or you're going to see a 5-wave move development here with this acting as a resistance, which will cause some type of a wave 2 and wave 4 pullbacks. And then when you see this, the pullback is going to give you opportunity. Okay, so for now, we don't see any of this. So this chart is, in my opinion, do not qualify to be on my watch list. Okay. Yeah, let's look XRP. So nice developments on the XRP. I'm going to show you that. So I did portray on the XRP as a triangle, which is still ongoing affair. So let's look what's going on the XRP. Had a lot of requests for the XRP chart. We need to see an impulsive move on the upside, which we still don't. As you can see, this might turn into a flat with a move lower. So that's why I say always look for a 5-wave move. And as you can see, we discussed this with our members yesterday, and actually XRP is moving lower, which potentially might mean that this C wave we can still can anchor lower. Okay. So always you need to pay attention on that so that you don't be stuck with the position. You always look for some type of confirmation. But overall, I look XRP on the higher time frame to be in some type of a triangulation with a potential resolution on the upside, being now in a D wave or a move down in C and beginning of the D wave on the upside. So it doesn't look bad still. It's a big sideways consolidation, as you can see, for now. So what we have said about triangles in this trade out, the triangle, the next move will be the last move. If we see 5-wave move here in a sideways fashion, this is not going to be so crazy bullish for the XRP. This was actually going to say you that all of this was a balancing force between the bulls and bears with one more move on the upside. So be aware of that. Okay, guys, so we processed a lot of things. I know maybe we sometimes spend much more time on macro, but I think it's very important because these liquidity issues in the system are very important for the crypto markets, as we have seen. So we're going to continue to track that, and we're going to include, so please subscribe and like. Because we are going to introduce daily updates. I potentially this week or the next week, I'm going to start to throw in occasionally daily updates, which means that I'm going to focus only on cryptos. I'm usually going to do Bitcoin and Ether for the daily updates and what I see day to day, what is going on there. So if you like what we do here, so subscribe and click the like to help us contact to go in this algorithm, Google algorithm up. I'm looking forward to provide daily updates as well. If you need a relatively solid and consistent crypto guidance, you can also revisit tradinganalysis.com and visit our crypto service. We have a beautiful membership with very cool members and lots of features there for members. You can also do a trial and check us out. So thank you guys for being with me, and see you next week, guys. Lots of things are going on, so I think daily updates will be welcomed by you as well. So see you next time, and bye bye.